Hi, everybody. This is Hyperwave, and this is going to be a fun and interesting episode. We have Krown on today, who is a very unique and interesting TA practitioner with a lot of interesting overlaps and also differences that we're going to explore today with Tyler as we analyze Bitcoin. So before I start off, just Krown, thanks for being here. And can you tell us a little bit about your background?
Hey, absolutely. And thanks for having me. It's a pleasure to be here with the Hyperwave community and meeting you and Tyler. So my background, my name's Krown. If you're not familiar with me, I come from traditional markets. I started off when I was very young. My father was a trader on the Florida Pacific Stock Exchange. I used to be a clerk every summer, just being the little grunt doing all the bitch work essentially. Fun times. Then after that, went to college for a little bit of time, figured out that's probably not for me. Actually did graduate with a couple of degrees, but came back down, started harassing some family members, or sorry, some family friends who I met down on the floor, and got pretty lucky because one of them took me on, a guy who was trading options on the floor of New York Stock Exchange ARCA. Took me under his wing, taught me everything that he knew, then kind of set me off on my own. Then I started to trade on the floor of New Stock Exchange ARCA. Fun times, met a lot of great people, met some of the best of the best of the best traders who just blew my mind with what they could teach me. And the things that they were doing with options and stocks was so overwhelming at first, but obviously a really, 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 really great experience. One of the guys in particular took me under his wing as a mentor. And basically just was very patient with me at first, as you probably understand when you're first starting. Can be some rocky times for sure, but a few years later, felt pretty good. Started trading my own account, and then from there, it just kind of takes you on further. Started working above the floor of Chicago Board's option exchange, CBOE, the one that just delisted Bitcoin futures. And then I heard about magic internet money, the good old Bitcoins, and and slowly but surely I started to siphon my way into there. I just really love the freedom, and I actually just liked the actual message of Bitcoin in general, because Bitcoin, unlike traditional markets, was not regulated, and so you don't have to deal with all of the all the FINRA stuff, all the SEC stuff. And if you're not familiar with traditional markets, there's a shit ton of red tape. It can be very, 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 very difficult. So you can never actually truly be independent. You actually have to be a part of a prop shop, just be able to take care of your legal aspects. So I like the freedom allure of Bitcoin, not having to deal with all of that stuff and not having to deal with all the overhead costs, having a seat on the floor of the exchange, having all of this market making software, having all of that very, very intense stuff, which, yes, you do get some great advantages from. And then slowly but surely moved my way on over into Bitcoin land. And then a couple of years later, here I am.
That's terrific. You said a bunch of stuff that's very interesting to me, mainly because of my background, and most of our listeners know what that is. Mm-hmm. My whole world for 40 years has been all the regulation, all the SEC, right, all the NASD, all of the Department of Labor for all the retirement accounts. And I basically was doing institutional trading. And so I got very familiar with all that. And then about 9 years ago, I heard about Bitcoin. I started mining Bitcoin. I got caught in Mt. Gox. I got disgusted with the exchanges. I got disgusted with the non-regulation. I got disgusted with not being able to really tell what the price was doing, because the price was so easily manipulated, on and on and on. So I walked away from it for a while, and then came back when things began to happen in the beginning of 2017. So that distinction between what you just described and what I've lived through, I'm finding the two cultures, and by cultures, I'm not talking about age, I'm talking about those that grew up with their investments or their speculation in the crypto space and don't have a lot of experience in the traditional markets. Mm-hmm. Obviously, you got experience in the traditional markets, and you now have a lot of experience in the Bitcoin market. What is your thinking, other than personally that it's great to get away from all that regulation and all that burden and from the regulated side of stuff, but what do you see as the distinction now between what's going on with the SEC looking at the crypto space and all the scams? And I applaud you for pointing them out the way we've been trying to do for a long time. but also recognizing that there's this brilliant thing, this brilliant, ingenious, world-changing, macroeconomic world-changing concept called Bitcoin that we want to protect, and we want everybody to understand it, learn how to trade it, learn when to get in and get out, which is exactly what you're doing. But I've heard some of your broadcasts where you're talking about the S&P 500, the UK, the traditional markets, which is what we do too. So if you could just talk a little bit about where you are in that spectrum of loving being non-regulated to the extent that we are in the crypto space, with the problems that it causes compared to the regulated space.
Yeah, so there's a lot of pros, there's a lot of cons. And with Bitcoin, the biggest thing that always comes to mind is there is no liquidity. You in traditional markets, if you're not aware, or to the other people out there, I'm sure that you are. You trade anything, you can get filled on whatever you want. When we were down on the floor, people were coming in. We were trading with institutions, and we were doing orders. You know, they would come in wanting 1,000 lots of options. It was insane. Stuff like that. In crypto land, you can't do that. You can't do that. And obviously, you know, when you do see an error in the exchange, when you do get this system overload on exchanges like BitMEX, all those sorts of, you know, very honestly bullshit types of things, that does make you kind of miss the overall regulation. Because, you know, in traditional land, you can just go back, you can call up your firm and say, hey, I need this trade busted. What was this, man? This was not real. You know, it's a bad print. You can't do that in Bitcoin land. There's no one to answer to, for better or worse. You know, we like that. And that's what in some ways, that is what I do like about Bitcoin. I have a strong personal belief that anything that gives people more autonomous control of their lives is a generally good thing. And what is Bitcoin? I mean, it's quite literally doing that. It's putting the finances in your hands. But with that comes, you know, personal responsibility. And so you do have to own up to those mistakes, for better or worse, even if they are not your fault. Unfortunately, that is kind of the reality that we're living in. So, you know, traditional land, you kind of have like dad over there who's watching over, making sure that everything's, you know, generally okay. Although I can tell you plenty of stories where maybe a little bit less altruistic behavior going on down there. But overall, you know, regulations are there in place generally to make things to make things okay. In crypto land, not so much. And you see these exchanges really take advantage of it. I mean, it's by no mistake that the BitMEX insurance fund is astronomically high, and good old Arthur Haynes is sitting over there in the most expensive office in Hong Kong. So, you know, for better or worse, there's pros and there's cons, right? And you just have to kind of accept that responsibility. So yeah, you know, I certainly do miss some of those aspects of it. Certainly on a few days, there was about a time a couple months ago where I really missed it. But yeah, you know, at the same time, we have to take responsibility for that.
Thanks.
That's great. Leah, go ahead.
Oh, I was hoping we could jump right in, but I also wanted to say, Eric, I was watching your video this morning. It was fascinating. Also, I saw that you did make $50 on your scalp, so you're taking us for beers later, right?
$50 on a scalp? Yeah, you want to have some beers, Leah? I'll have some beers, okay?
No, I also really liked what you were talking about with opportunity costs.
Yes.
So
you're referring to that, yeah. I got in a dog shit trade earlier.
No, you're absolutely incredible. So actually, before we get into it, maybe that does remind me, because we do talk about economics. At least my degree is in that to begin with in bachelor's. I liked what you were saying about opportunity costs, and we don't talk, I think, enough about economics on our show sometimes. Right. So given that you come from such a really interesting traditional financial markets, well, definitely not traditional, and your background is very interesting. But how do you see opportunity costs and the way that you're trading in Bitcoin may be different from traditional markets, just also in the craziness?
Yeah. So what Leah is referring to is this trade that I took I think it was yesterday or a day and a half ago, where I shorted something like 5,100. And I was looking for a big breakdown, didn't get it, ended up taking, you know, a $10 scalp on my position. So, you know, with that, it brings up the conversation of opportunity cost, right? Where if I have that money stuck in that trade and it's not really, it's not really producing over a day, day and a half, you want some return on that. That is not a good trade, in my opinion. Even if you make money, it's not a good trade because there's an opportunity cost of also being involved in something that actually is moving. And to parallel that with traditional markets, the beautiful thing about traditional markets is that I made my living trading the 5-minute. I never even looked at it daily. I didn't care. It didn't matter. I mean, especially as a market maker, we didn't really care about direction to begin with. That's a whole nother conversation, which I think a lot of people get very wrong. But in Bitcoin land, I've actually sort of started to adopt more of what Tyler's doing and actually trading the higher time frames and just going off of that. I've really only made about three big trades in the past 5-6 months. I shorted 6,300 before going down to 3,000. I longed 3,900, and then I tried one last night. Didn't work out. So that's kind of where I'm at for Bitcoin. I only look at the weekly really when it comes to trading, and then for the shorter term time frame stuff, I'll go over to a forex my forex broker, do stuff there because that's moving insane. It's just incredible. I mean, it's the complete opposite of Bitcoin right now. Bitcoin, you used to be able to make money on the 5-minute, on the 15-minute. You can't really do that anymore. The game is different right now. We're in that phase of the market cycle where there's not all that much opportunity on the lower timeframes. It's the higher timeframes, and it takes a long time to really populate. So I really think that Tyler's actually on the right track there because, if you can just sit back, take the trades, and just relax and perhaps focus on other things, that's significantly more important. That's going to be significantly more valuable as far as actual time spent and using your opportunity cost wisely.
Thanks, Eric. Tyler?
We think those are incredibly wise words. They're along the lines that we've been trying to teach for the last year. I break the world down into short, intermediate, and long term from an investor's point of view. And short to me is days and weeks, and intermediate is weeks and months.
Right.
And long term is months and years. And the one that I'm interested in, and I always go back to before I trade the short term or the intermediate term, is the long term. I hate trading against the long-term trend. Right. A lot of people love it. And no question, Bitcoin from 19,600 on Bitstamp all the way down to the present level has afforded a lot of opportunity to play a counter trend over and over from 6,000 to 10, from 6 to 8,500, 6 to 7,500. We haven't taken any of those trades because it's against what I see as a main trend. However, those are position trades, and you can use all the stuff that you do and I do with technical analysis and a lot of other people doing those trades. You're simply not going to hear Leah and I talking about that. The other thing that we try to stress is my favorite asset class of all time is cash. I just love cash. I love sitting in cash until I see a long-term trend move. Now, we put all of our clients back in 2009, 2010 long the US stock market and did not trade out of that for 10 years. We did trade out of it last year, got completely out, and then half out, and now we're completely back in again. And back in 2016 and down in 2011, 2012, where we had some screwy stuff happening sideways for a year, we did raise a little cash because the intermediate term looked nasty, but we didn't raise all that much cash. The reason I'm saying all of that is from your perspective, I'd be interested to hear, you said you did like 3 trades, and the big one obviously was 6,300 down through the 6,000 level. Yeah. Now, we had been there 3 or 4 or 5 times in the previous 5 months. What was it about that time, that point in time that you saw technically that said this has a good chance of going lower?
Yeah, we can actually, do you want me to get into a chart right now? We can.
Yeah, please.
Exactly what we were looking at. Okay. Just 1 second as I figure out how to actually do this. Okay.
Yeah, it's over on the left of the screen. There's a little green arrow. There you go.
Sharon? All right, cool. Okay, great. Okay, so let's get on over to this chart. And I really like what you just said there, because monthly time frame is where you judge the trend. And, you know, just to kind of start it off, the trend is still down. The trend is still down as far as I'm concerned. Lower highs, lower lows on the monthly. You don't need to be a professional trader or anything like that to look at this and say, hey, that doesn't look too healthy to me. But overall, what caused me to take a short from 6,300 down here? Well, it was a multitude of things, actually, and something that I'm really documenting right now to kind of judge the next big trade, which is the one that I tried a couple of nights ago, which did not work out. But basically, going back on here and starting with a fundamental indicator, the MVT signal. The MVT signal is a network value divided by the daily transaction value. I'm sure that you guys are already familiar with it. And
Yeah.
there are multiple things with the MVT signal. And for anyone else who's not familiar with it, it is perfectly called all the major tops and all the major lows in Bitcoin's history. If you want to back test it really quick, here you go. And you can see pretty damn good. So, you know, when it comes down to it, though, you'll notice it will signal red for a long period of time, right? It will, you know, it'll give you this red, which tells you to be cautious, but it doesn't necessarily tell you exactly when. So with that said, I was waiting for something very specific, and I was waiting for this. I was waiting for it to actually break this orange moving average right here. But as you correctly said, we took a stab down to that 6,000 level multiple times right over here, and we never really broke the 6,000 level. So what made this level different? Well, we were hovering right around 6,000 when we were red. And on top of that, and this is what I call the gatekeeper, we broke this orange moving average right over here. Then that led on to the next set of gatekeepers, of which I need to see all of them in order to be very confident in looking for a big down move. And starting with it, you know, we can just go over the Stokes right over here. Daily Stokes were crossing down, coming in this range right over here. Need to see that on. Then on top of that, we saw the daily RSI actually putting in and taking out this exponential that I have on it right over here. And you notice this on each and every one of the major drawdowns for the MVT. So, you know, we had those two. Then on top of that, going over here, I have my own special indicator, which I call the Jewel. This one was getting into a resistance cluster right over here, which all of them kind of combined together were telling me, hey, this is a very scary time for Bitcoin as we do kind of shuffle our way along here. Overall, we know that we're in a downtrend. We're making lower highs. We weren't necessarily making lower lows at this point, but still, the former trend was a downtrend. So go with that until told otherwise. And what I judged from there is I said, hey, we're kind of like teetering along this area. We know that a big move is coming. How do we know that a big move is coming? Well, you know, this triangle was getting extremely mature. You know, the apex was probably somewhere right around here. If I actually just put it on for a second, let's go to a fresh chart. Somewhere right over here on this. So we knew that it was coming relatively soon. And then on top of that, what I also like to do to kind of judge whether a move's likely to happen or not is I use this indicator called the historical volatility rank, which if I have it on, whoops. Let's see. I think it might be in my invite only. Yeah, there we go. The historical volatility rank. So I'm sure that you're familiar with volatility. It's basically a mean reverting indicator that oscillates between 0 and 1. And when it's 0, it means that we're, you know, at the very end of a consolidation. When it's 1, it means that we are, you know, coming to a fruition point of price action. For example, it was, you know, it's ticking like a 1 right over here on the major high of 20,000, taking a 1 over here at the major low of 6,000. Well, you'll notice after that, the historical volatility rank just got absolutely slacked all the way through the rest of 2018. And then it got so damn low. So in confluence with all of the other things that I look at, this was the one that also kind of set it over, you know, the back and said, hey, be aware that a move is likely to happen now. We know that this is bearish. We know that it's extremely likely to break down. This is likely the time to take a position. I think I was also looking at my moving averages, especially on the 2-day, which I've noticed on Bitcoin, the 2-day time frame really gets price action a lot better than the daily. And then it's also weird because the CME chart gets things a lot better on the daily than what the spot prices look like. I think that's because they get rid of the weekend data most likely, and the 2-day kind of helps, you know, simplify that out. Anyways, we had a death cross on the 2-day right up here, which is very important to me. We had the green 55 crossing the downside of the purple 200. Not only that, but my rule is that when you have a death cross and you're below all the major moving averages, that's the time to take a major position. You can see that right over here. We were doing that as well. So it was kind of like all the stars aligning with everything coming together, because we always had a few pieces of the puzzle here, a few pieces of the puzzle there, and we never really saw them all line up. So that was kind of the final straw for me. I saw that we had just got rejected from this yellow 21 exponential moving average, which is what I use again to kind of judge, the strength of that cross. And after that, it kind of just slowly but surely got shuffled off the cliff. And, a month later, the move actually happens. And again, going back to what you said, it does, it looks like it took a very long time on this 2-day time frame right over here. But if you go to the monthly happened it's actually way over here. But monthly happened, it takes its time. So this is the benefit of looking at these higher time frames. You really get rid of all this nonsense that's going on in the lower time frames, which can be very confusing and very compelling and really play with your emotions, making you, bullish 1 second, bearish the next second, and it's just an everlasting battle with your own internal processes. And when we look at something like this, we can see, okay, Bitcoin's really teetering around here, and then boom, the bomb finally drops. That's also interesting to me right now, because I know that with your Hyperwave theory, which I actually really do want to ask some questions about. You're calling a low much lower. I don't know if I can, as a trader, I would never, I don't think I'd really say that, but I can see that this is certainly a time right now to be cautious more than anything, because as we just spoke about, daily MVT signal is red. Is it below the moving average? No, it is not. So that's my first gatekeeper. That automatically makes me say, hey, back away from taking a trade. The reason why I took a trade the other night is because we actually did close one guy below it, did not close the second one, which is what I need to see. But we're also at all these at the top of all these major moving averages. I love these moving averages for long-term trend, and the blue 377 is the most important one for me. The daily is giving us rejection right here. 2-day giving us rejection right around the 200 exponential. That's the purple one, and we're actually also kind of hovering around the 377 as well. 3-day, of course, another rejection of the 200. Weekly, we actually have a pretty nasty cross going on right over here, and we are still respecting this. So far, so good. And then monthly, we do have the yellow 21 and the red 10 simple crossing the downside, which to me is typically a signal of the overall trending strength. And this is actually our first cross. And if you're familiar with how crosses work, I really want to see price action actually being pulled into the cross. And then it's the reaction off that is what tells us if it's going to be played or not. Because what we're really looking to see is are the major market movers who are using bots and algos most likely going to play this or not. So this month is actually so critical for price action for me, because if we do close above this area, I will be looking for a move much higher. Much higher is a relative term, right? On lower time frames, significantly much higher. But if we do close below it, that would kind of give us insight to saying, hey, this is likely to be played out, and this is the time to be, defensive, especially keeping in mind that the overall trend is still very much down. So that's kind of what I wanted to get out over there.
That's terrific.
Can I jump in for a sec, Ty?
Yeah, please.
Thanks, Eric. Just an FYI, I think you moved away from the mic. Yeah, we could hear it, but it was better before.
Okay. How's this?
Oh, it's fantastic. That was really, really great. And then Tyler, when you jump in, I know that Eric was asking about Hyperwave, but also for everybody else listening and who's coming from Eric's channel, there's a lot of crossover right now for the way that Tyler uses moving averages than the way that Eric is using his moving averages right now. So also, Ty, if you want to jump in, I'm seeing a lot of interesting things that you could point out on the chart that he currently has out.
Well, absolutely. I got very interested when some of our followers said, you've got to listen to Eric, because a lot of what he does with his moving averages, and I really like that jewel, the way that works, but is very similar to what we've been teaching people for a long time, which is a very simple technique, complicated, and is probably the reason most people don't take the time to look at it, which is just when you're talking about long-term trends, the only way you can get from a bull market to a bear market, if you're using only price and 3 moving averages, you've got 4 up there, but just thinking about the 3 moving averages, a bull market by definition has each of 3 moving averages underneath the price. And the shorter one is always going to be closest to the price, the intermediate in between, and the long term, but they'll all be moving up together, as you see on this Hyperwave chart. Now, I use 2, 7, and 30, and I use simple moving averages. although I experiment a lot with exponential. And on the 2, 7, and 30, a lot of people say, why in the world would you use a 2-day moving average? And the answer is because it almost always stays within the candle's body. And when it moves outside that body, either above or below, it tells you something might be happening. So what Consensio does is it says, how do you get from an up move where the price is above 3 moving averages to a bear market where the price is below all 3 moving averages and the short term, intermediate, and long term have all reversed position? And the answer is there's 1,000 different steps that have to take place using 3 moving averages in a price. And we spent years calculating those and then built an ETF trading system that traded 125 different ETFs on a very short-term tick-by-tick basis using Bloomberg database. And it works remarkably well when you speed it up from weeks or months or years down to even minutes. And that told us that this idea of understanding what happens when the price breaks down through a short-term moving average is an important leading indicator. We call it like a canary in the coal mine, because that short-term moving average can't move down until the price gets below it for a period of time. And on a 2-day, it doesn't take very long. But then on the 7-day or 7-week or 7-month, I use the same 2, 7, and 30 regardless of the time frame. If I'm looking at a yearly chart, I use a 2-year, 7-year, and 30-year. So I love very long-term things like the Copic curve and the ADX on a monthly basis and all of that sort of stuff. But anyway, just that simple recognition that you have to go through steps, and the steps always are identical to get from a bull market to a bear market or a bear market to a bull market. Not just bouncing off of trend lines, but as each of them cross each other, you get more and more evidence of the overall trend of the market. So I love the way that you explained what you just did. I just point out to some listeners that Tone Vase, who we are great friends with, and we will be doing a show this Saturday with Willie Woo, who's done so much work with the VTN and all of its derivatives, and Ven Zen and Murad and others debating, have we seen the bottom or not? Because all of us for a long time said that we've got to go much lower. Now we're pretty evenly split between, has the bottom been made in Bitcoin or has it not? And all of us are technical analysts, so it's going to be a slugfest, and it should be a lot of fun. And some of your comments got me thinking about the way Tone called the break of the 6,000 level. I called that break because phase 2 of Hyperwave line came precisely at the apex of that triangle that you just pointed out, the big triangle that had been building for a long time. Tone drew the same triangle that you did and really was flogging it to death, that we're going to break up or down out of this. And now I heard you this morning make a great observation about this recent consolidation we're in on a short time basis on Bitcoin, that the apex of your triangle comes, I think you said May 1st or May 2nd. And so don't get excited. Don't be too expectant that too much is going to happen until we get closer to that apex. Right. If you wouldn't mind just pulling that up again for some of our followers and just walk us through that.
And also, Eric, what I found interesting this morning as well is, again, I liked how the acronyms got switched with you there, Ty, for a second, but the NBT for sure. You know, Wu is definitely a genius on when he created it, but I think not too many people understand how to use it. And I like that if I understand what you are doing, you know, you have a bit of a twist on how you use it. And what I appreciated is that you said not just because it turned red, do you need to put in a trade immediately? But instead, you actually are looking at it more long term.
Exactly. I love that crossing of the moving average. And after you go over this triangle, I'd love for you just to go into a little more detail of what that moving average is and why you think that it's so critical for us to have that break before you're ready to call a top or a bottom.
Oh boy, we're bombarding you here.
Alrighty, so yeah, for these lower time frames, we are working on an ascending target right now, as long as we're kind of following this governing support right here. But as you said, the apex is all the way over here in May, just like the major triangle that we were looking at above 6,000. The apex was, I mean that took what, a year?
Yeah, a long time. Yeah,
right, and that's why, when you talk about the higher time frames, I can really agree with that. Because when it comes down to it, how often do major moves happen? Not often. They don't happen often, to be quite honest.
Right.
In Bitcoin land, and as far as relative to what Bitcoin is, can do, not all that often. I mean, we spent this whole segment right over here, like 3-4 months, just consolidating before actually breaking out. And things take time, and so this is why these phases can really mess with people. People will be getting bullish at the wrong time. People will get bearish at the wrong time. It always seems to work like that because we as humans just cannot deal with this abstract notion of time. It just seems it's too much for our brains to handle. So even if you are bullish right now, it's still likely to take some time to play out. I mean, you can be calling a bull move right here, but you might be waiting, another week or so is what it comes down to. As far as the moving average that you're speaking, I believe you're referring to the 21 on the monthly, this yellow moving average right here. And this one's just very important to me because as far as what I did in traditional markets, I would always consult with the higher time frames, the monthly, and use the 21 exponential to kind of judge if the overall trend was generally bullish or generally bearish. And you just back tested it on Bitcoin, it's pretty damn good. You see it over here in 2014, 2015, we break the 21, and that's when the really aggressive downtrend began. We tested it once, we tested it twice, we tested it thrice, then we broke through it, and we closed right above it just by a slither right over here on good volume, and off to 20,000 from $300, right? So very simple things like this tend to work, but the key is to be patient. And when it comes down to it, if we were to close above this guy on the first pass, I would be a little bit surprised. Could it happen? Yeah, absolutely. But that's why I don't trade my opinion, I trade the technical analysis. If we do close above this, likely do make our way a little bit higher. But keep in mind, the overall trend still has to change around. Still got to make a higher high, still got to make a higher low until you can really confirm that on a monthly. The illusion that we play though is that we're doing these videos every day or mostly every day. So you got to talk about some, and obviously things take a long time. So when we're looking at something like this, it's not too sexy to be talking about right now because it's unlikely to play out until likely the end of the month. It is interesting to me that that will be coming at the end of April of this month, leading into May. And there's that beautiful saying, sell in May and go away, right? So
yeah, I heard you say that this morning, and I've used it in traditional markets, particularly the U.S. market. And since the U.S. market's the biggest in the world, it affects all the other markets. So you get these seasonal patterns that work unbelievably well. But I hadn't ever heard anyone apply it to the crypto market, the Bitcoin market. By the way,
it
just
worked pretty well last year.
Yeah, amazing. That
Yeah.
I have no idea why that would be.
Off chance, Eric, if I can ask you a question, given that we're talking about traditional markets, and I do love that adage, sell in May and go away. And I do think that actually that some of these need to be demystified in the crypto world often. Do you have any thoughts on when the quarterly futures expire, if that has any effects on Bitcoin price action? Because I thought that I personally, and I think Tyler may disagree with me or agree. I don't know. We actually haven't talked about it, but it did coincide kind of interestingly this past time.
Yes, I believe that you're referring to the CME futures expiration.
Yeah, I know you were a CBOE, but yes, CME.
Yeah, so the reason why that typically happens, the reason why we typically get price action movement, volatility around expiration is because traders are just, they're just rolling their positions. So they're gonna have positions expiring at the end of the month. Then they have to go in and make sure that they're protected, right, when the next month comes in, because their position's quite literally gonna go away. So they might have a position on spot exchanges. Maybe they're long on BitMEX, and then they're short on on CMEs. I don't know if someone's really doing that, but maybe they're long. I think CMEs uses Gemini to trade against or as an index. So they'll be long on the spot underlying, then short on the futures, and they'll have to run their position some way. There's so many different forms of arbitrage that when you have anything expiring, there's likely to produce some massive volatility. And especially now that CMEs are really getting a lot more, a lot more love with the way that they're actually like trading. We do see them have a lot more, actual insight on what the price action is going to do. You can pull up the commitment of traders on CMEs, and it actually has been pretty accurate, albeit we don't really have a massive set of data. We have about a little bit over a year now. I think CMEs went live in December of 2017.
Right.
So right. So it's not like too historical, but there does seem to be some good overlays with that, and you can actually, in some ways, guess where price action is going to go based off of the prior trends, whether the institutions are long, whether professionals are long, whether the retailers are short, that kind of stuff. It typically does have some interplay there. It gets a little bit more complicated, but yes, it does seem to have some significant impacts with price action. Not always, though. The CBOs did not, and the CBOs did nothing. No one was trading them, but the CMEs now seem to do some damage.
Very interesting.
We haven't talked about that last time, but also because we were running off the Malta. But any thoughts?
No, it's very interesting the way institutions were moving closer and closer into the space, and then once they actually got the SEC to allow certain things, they've all backed off of it. Obviously, the CBOE is the most recent, but just a lot of projects and things that are going on, which is that's a long way of saying one of the fundamental reasons I'm as negative as I am on the space at this point is because of the space. That hasn't changed in 9 years from my perspective. And it's not so much that people in the space can't get used to it and get comfortable with it and understand what the risks of moving money between exchanges or from wallets to exchanges are and all that sort of thing. It's more that it becomes very confusing for everybody on the outside of the space to understand what's going on the inside of the space. And they say, oh, screw it. I'll wait for it to mature, and then we'll move in. And we're kind of insular in this space to the extent that once we're confident about what we're doing, how we're doing it, how people like you make decisions, or Tone and others, there's a way to navigate this maze and get what you want most of the time. Sometimes you don't, and somebody will put in a big pump and dump on you out of nowhere. I heard your comments about Ripple this morning, and that happens over and over again. And we just kind of in the space say, oh, okay, yeah, chuckle, this happens. But the people on the outside don't. And particularly as you get into bigger and bigger institutions through banking institutions and places like Fidelity and places like Goldman, and then finally up to the real players that are going to determine if Bitcoin makes it or not, which are the central banks. And you've probably heard, the IMF and others they're looking at things, they're doing things, but okay. Now, the reason I'm going through all of that is the comments that you made before having to do with I took most of your comments today and yesterday as being intermediate term, short term, more negative than positive, unless we are able to break out above some of this overhead resistance.
Yeah.
Let me just ask you, do you believe not technically or any way you want to answer it, do you believe that we have seen the bottom in Bitcoin?
I think it's unlikely. To be honest, my personal opinion, I think it's unlikely. As a trader, I don't care.
Right, exactly.
It doesn't matter. It doesn't matter to me. Yeah, I do hodl some Bitcoin long term, but that's, as a trader, you have to be able to make money in all sorts of diverse environments, and whether it's moving up or down, I don't care if it's bottomed. For the most part, I do this as I do this as a living, and when trading Bitcoin, you can be bullish for a week, you can be bearish for the next week. It changes around. Do you want, if you are trading the higher time frames, then yes, that is going to be appropriate to hodl those positions a long time. But remember, also have to think about that opportunity cost. So it's a careful interrelay with them. And the way that I've found best to do it is just trade Bitcoin on the higher time frames, trade other things on the lower time frames if you want to scratch that itch. And that's what's been working best for me right now. And until Bitcoin, if and when Bitcoin actually does switch around. But going back on what you said, man, I actually really did want to ask, actually want to get into that conversation a little bit more, just because the way that you see the traditional land actually start to build up the infrastructure around Bitcoin land is telling us that we are going in that direction. And it's interesting because, the crypto anarchists have some sort of like sexual fantasy with the whole monetary system falling apart. Whereas what I think is likely to happen, and I think that you're probably on the same page, is that we're going to see the traditional land actually integrate with crypto land. And that's the way that's going to go. We've already got futures. What do you think happens after that? Probably going to get some an ETF or backed, or whatever the hell they want to call it now. SIBO was offering futures. I didn't even know they traded futures there, man. I traded above there for years. I never knew that they traded futures. We trade options there. So at some point we're going to get some legitimate options, and that just adds more and more legitimacy to this. But it takes time. The traditional world moves slowly. It moves very slowly. So whether Bitcoin's bottomed or not, getting way off topic. If I'm going off of just my past history and looking at and looking at what traditional market bottoms look like, I'd say that's it certainly does not look like the most obvious bottom of all time. I would like to see a few more things. That also doesn't mean that if I see some things change around, if I see us get back above some critical levels, I'll go to straight up bullish, and I will be hodling for much longer. But again, man, as a trader, does it matter? Not so much.
Yeah, that's great. And it looks like we've got Tone here with us joining.
Hey guys, Leah just sent me the link. I don't really have much to add right now, so I'll let you keep going. If you guys have a question for me, I'm on. Nice meeting you, Eric. I'm actually not familiar with your work. This is the first time I've ran across you being on their channel. But I really liked one thing that you said, and it was really awesome. I'll probably steal it, and I'll use it in a lot of my videos. When you said, "I don't trade my opinion, I trade the chart," and that was really good, because again, I've been a bear for over a year now. Mm-hmm. But I've taken on more long trades in Bitcoin, I think, during that time than short trades while being a bear. Because again, like you said, you don't trade your opinion, you trade the perfect trade in front of you.
Right. Yeah. Hey, good to meet you, Tone. Yeah, man, it's one of those things. That's why we do technical analysis. If I was trading my opinion, I'd be fucking broke.
Exactly.
It wouldn't go well, man. But I figured out how to make a living with just using tentacles, which seem to kind of separate that whole away from it. You see a lot of people get really emotional in this space, which is to be expected. We're talking about money here, right?
Absolutely.
And, right. And especially with crypto land, because we have, this is coming from someone who actually likes Bitcoin, but I'll say it straight up. We have a very cult-like mentality with what goes on here. For in some ways, some good things, in some ways, some very strange things. But to be fair, that's kind of where we're at right now. That's kind of where we're at in this game.
Yeah, those are great observations, Tone. We just started a little discussion about sort of the macro picture. I made the comment that one of the reasons fundamentally I continue to be bearish is, number one, there are just too many altcoins, too many projects that have no validity to them, and they're basically just scams. And of course, Tone is the the leader of the pack in terms of calling out scams, and just did a very interesting one a couple of days ago. But at the same time, fundamentally, what that means to me is, unless you're in the space and you can differentiate between Bitcoin and everything else, we call ourselves Bitcoin standard bearers, or because in my opinion, unless 95+% of all these projects go to zero, we will continue to be in a bear market. Now, that's a wild assumption on anybody's part.
Gonna get a lot of hate for that, man.
Yeah, exactly. And I hope I'm wrong, but I don't believe I am going to be wrong. The second thing, though, is as long as we are as insular or as cult-like as you described it as we are, that means everyone on the outside, particularly those that we need for adoption at the institutional level, the hedge fund level, the regulator level, the country level, are going to be very reluctant to try to untie this Gordian knot, which it must appear to be to everyone on the outside. I've tried to explain it to family members, to close friends, to business partners who know fundamental and technical analysis, and I swear it's the most difficult thing in the world to get a normal person to accept.
We're looking at magic internet money that's, I mean, again, this is coming from someone who likes it, who believes in it long term. Right now, it's used for nothing. It's worth, what's it worth? $5,200 fucking dollars. Like, what the hell world am I living in right now? In explaining to people, then you're trading this using some sort of special mathematical equations on top of that. Yeah, you're gonna get a lot of weird looks. I completely understand that. And that's, again, that's where we are at. We get this cult-like mentality, and that's what kind of promotes this view that, hey, if you're not saying that Bitcoin's bullish, go fuck yourself. Well, that's not really helpful for anyone, because it's the reality of the situation is you're going to be bullish, you're going to be bearish. It's just that's just the way that's going to go. Even if you believe in Bitcoin long term, even if you love Bitcoin, there's going to be a time to be bearish on it. So going back, yeah, go ahead.
If I can. So Thor was going a little nuts there. I got a flower bouquet, but now he has calmed down. Thank you, Eric. And Tone, thank you so much for joining. I was definitely sent Tone the link when we started talking about synergies and also differences between traditional markets and Bitcoin. You guys come from all a very similar, interesting background, starting in Wall Street. So I do think that this is just a fascinating discussion. Also, because just to take it on kind of just a very simple level, because I think that a lot of people think that that markets and trading is super, super complicated, but on the very basic level, that it's buyers and sellers, supply and demand, and potentially, which I believe and Tyler believes, that Bitcoin is potentially the most democratic asset class that's ever existed when it comes to buying and selling and trading. But so yes, very simply, fundamental or technically, in the end of the day, if you want to trade both traditional markets or Bitcoin, you're going to choose whatever, hopefully, especially if you're a money manager, you are going to dismiss what you shouldn't be trading, and you should be focusing on really what you should be trading when it comes to really all time frames. But I will let Tone jump in right now. I know you've been listening. You have a chart up. Tone, am I allowed to put this one full screen?
Yes, please. So this goes to what Tyler just said. And, we've been talking for a while about Bitcoin needs to separate from the rest of this nonsense. So yesterday, I did that video on token pay, which is an outright scam. And I did a video on that. And then I just had this thing, like, it's so hard, like people don't know their history. And I've been, Eric, I don't know how long you've been in crypto. I've been around since early I've been paying attention to it since about Q1 of 2013, and actively, the first time I ever spoke in public about Bitcoin was in Q1 of 2014. So I was actually around for an entire year before I said something publicly. And back then, when I said something publicly, obviously no one was listening. So it took another year or so Well, actually, for me, it took a little less because I immediately started writing at Cointelegraph. But so many people are coming in and they're basically talking about what they don't know. So yesterday, I literally spent over 3 hours and add another hour today. And I just decided to go through the historical charts on CoinMarketCap. And unfortunately, they only had Friday screenshots, like only as of like end of the week, Friday or Sunday. And I wanted to see all the coins that have ever been in the, I mean, I want to do it in the top 10, but I want to see it in the top 5 because doing it in the top 10 was just going to take up 20 hours or 30 hours of my time. And we can see some of these amazing coins that have made it into the top 5. And I'm putting this together so I can tweet it out later today. I mean, coins like Cork were at number 5. Coins like Aurora Coin actually made it to number 2 if there was a daily snapshot. And coins like Paycoin, where the CEO, I believe, it may or may not be out of prison by now, but that was at number 3. I really wanted to see BitConnect in the top 5, but unfortunately, I think it only made it to number 7. But there were other gems, like the DAO made it to number 5. Steam made it to number 3 on CoinMarketCap. Even recently, we're talking NEM made it to number 4. Bitcoin Gold made it into the top 5. IOTA made it into the top 4. And this is crazy. And I want to highlight these things for people that they don't change. 2 through everything will always fluctuate as they eventually all go to 0. I mean, Ripple has been around there for a while, but that's also insane. They're not even a blockchain, right? They shouldn't even be on this list. I don't understand why they are. Spain Coin. I mean, this stuff really gets out of control. And just as I was doing this work this morning, I see a tweet from Datalight, which is awesome, by the way. And they like literally did all of this work that I was like trying to do myself so much better. And it's amazing. Everyone has to go and watch this video. It shows you the top 10 and how it has moved around since 2013. It's really, really awesome. And you literally see so many scams in there. And you have to realize there is Next at number 3, you know, and it was there for like months. And like it just goes on and on and on. You see BitConnect pop up. And this is amazing. And now think about all of those coins that are still around that haven't even yet made it into the top 10. It means you're not as good as BitConnect was. You're not as good as Paycoin was. You're not as good as the DAO was. And people are still believing in that nonsense. So yes, all of this is going away. Sorry, that was a little ranty.
That's fabulous. Thank you for sharing that before you tweeted it out. This is going to be a big time popular thing. And congratulations to Datalight. Sorry they stole your thunder, but that's a great way of showing it. Eric, at one point I saw you shaking your head when Tone was saying they're all going to 0. I'd love to hear your thought about that.
Oh, if they're all going to 0, I mean, describe what 0 is. BitConnect has fucking litigation against them, and they're not going to 0. Now, I do believe that most things in this market have 0 business being traded. They are garbage, disgusting, but we still allow penny stocks to exist. You know, people, it's like basically legal gambling for people. So, you know, as long as people have this, as long as people feel this tribe-like mentality towards things, it's hard to actually destroy these coins. It's not really until
Eric, so let me clarify the statement. We will care about everything other than Bitcoin and the crypto space about as much as we currently care about anything trading on the pink sheets. Other than GBT, with the exception of GBTC, which happens to be trading on the pink sheets.
I don't think GBTC is going to be traded for too long either, to be honest with you. You know, once an ETF comes around, that the use case for something like that.
Agreed. So to me, yes, they'll still be there. Yes, they can still be tradable, but so are penny stocks. Exactly.
Okay, yeah, fair enough. Yeah, man. I mean, I'm kind of the same opinion. Most of the things in this market are just complete fucking garbage. They just disgusting to even look at, to be honest with you, man. And I've even gone into like page 5 of CoinMarketCap, so I even dread what's on there. But yeah, man, are they all going to go to zero? I mean, yeah, they're going to get shuffled out. Bitcoin and probably a few of the other major ones. There's probably going to be, I'm of the opinion that I think it would be naive to say that everything's going to go to zero. There's probably going to be a few majorly successful coins. Do I know what they are? Fuck no, I don't. I don't know what they are. We probably haven't even seen them, to be honest with you. Is it Bitcoin? Probably Bitcoin. Do we have other ones in there? Maybe we have them up right now. Maybe Litecoin's in there. I mean, I think Litecoin's, going back to the conversation of bottoming, I think Litecoin's actually bottomed. I'm not sure about Bitcoin though. But as far as that,
I think the next halving is going to destroy Litecoin.
Why do you say that?
Because when it comes to Bitcoin, there are people that will mine Bitcoin at any price of Bitcoin.
Okay.
Litecoin believers are not as fundamentally committed to their coin, and unlike
have you seen the hashtag Litecoin gang? Because they're definitely out there,
fine. That's fine. But the thing is, though, they're not going to be mining Litecoin at a loss. See, I will be mining Litecoin. Okay. I will be mining Bitcoin at a loss because the use of Bitcoin is important to me. I wouldn't have a business if it wasn't for Bitcoin. So the use, my business is so important to me that I will mine Bitcoin at a loss. And there are lots of people like me. How many people will mine Bitcoin at a loss? And with every halving, you are forcing Litecoin users to mine Litecoin at a loss, and they will switch off that mining equipment. They will move it somewhere else. And a halving in Bitcoin helps the price of Bitcoin. A halving in an altcoin, all of those people are fluid. They believe in a multi-coin world. If there is any kind of a mining going on, they will move it to whatever is profitable. So halvings in non-Bitcoin proof of work currencies is a complete and utter disaster. A Litecoin will probably use their centralized power to create infinite inflation because they're already inflation on top of Bitcoin. They'll need a way to eventually incentivize the miners. Another halving or two, and they're done if they don't change the underlying code.
Yeah, I hear you, man. I don't disagree with that. I do not disagree with that. Going off the actual charts right now. I'm not really talking about fundamentals. Just
yeah,
offhand.
Right. Well, we've gone an hour now, and I really appreciate it. We've got to do this again, Eric, if you don't mind, and Absolutely. Get more into the technical stuff. Tone, he's got some very interesting, innovative ways of looking at a lot of the stuff you and I look at. So that's terrific. And Tone, thanks for joining us. Leah, I'll let you take it over from here in terms of any other questions that have come in or questions you'd like to ask.
Yeah, I think maybe just to end it, from the videos that I was watching, at least this morning, and obviously I could definitely be incorrect on this, I found obviously not just your importance on what you're seeing in the exponential moving averages, but that you also place a big importance on stochastics, even more than potentially RSI. Now, what I love having Tone and my partner Tyler on this show right now is that they are very similar in what they look for as a priority regarding looking at price movement and trends. But I would love to hear from your perspective, and also you were talking about, actually being bearish and looking at bear divs for the price. But what indicators are most important to you and that you look at from a priority perspective, if we could kind of end on that?
Yeah, it's actually quite simple. I mean, I'm not really doing anything too crazy. I'm looking at exponentials first and foremost. That's what I learned the most. That's what my mentor was deep into. That's what he kind of indoctrinated me into as a belief. On top of that, then I'd use stochastics second, RSI, and then, just straight up horizontal support and resistance gets it quite well. I mean, but that's for more of trading. When I'm looking at overall trend, I suppose RSI is probably a little bit better for that than your traditional Stokes. But I do have, a various amount of different Stokes, some with my own personal settings, some with, just default, all that good stuff. And when it comes down to it, when I'm trading that, I'm doing different strategies. I'm looking more for scalps. When I'm trading exponentials, I'm looking more for trends typically. So it's different strokes, right? There's a whole plethora of ways to trade, a whole different, all different tools for all different styles, and everyone has different, trading personalities, right? We could have different views, but still both make money using different tools, and that's what it really comes down to, is just finding what works out for you.
Would you mind just pulling up one more time? I'd like to show Tone, because I don't think he saw it. On the longer term chart of Bitcoin.
I was watching your show the whole way through. So
okay, good.
If there were charts, I saw them.
Well, Tone, what did you think about his use of some of Willy Woo's observations in terms of the fact that we've been in this red area for so long, and it's called all the major tops before?
I mean, Eric, if you want to pull up that chart one more time, I actually don't even know how to pull up the NVT on my charts. I've never have, but also I'm not a fundamental trader. I don't trade the NVT only because you can only look at so many things.
Yeah, I'd love to know how you got that charted. Also, are you using TradingView?
Yeah, I'm on TradingView. It's just right over here. Go to your indicators, type in NVT. It's the one that I favorited by Glitter Fund with 3,000 likes. That'll put it on charts for you. It's just going off of Willy Woo's site, I believe.
Terrific.
Yeah, I just added it to my charts. And what time frame do you usually look at it on?
Yeah, so that's actually a really important question, Tone. It has to be used on the daily, as far as I'm concerned.
The daily. Okay, so I just added it to the weekly, so that's
only
not really
the daily.
useful.
The weekly will give you false signals. It is wrong. It is not designed for that. At least in the way that I've backtested it, does not work.
And maybe just go over again on the daily where you see us right now, Eric, compared to the breakdown at the 6,000 level and the breakdown at the very top.
Well, let's actually start from right here, because it'll be easier to kind of go through this in chronological order. And I've found that when the MVT signal is doing all this business, there's a very specific setup that actually triggers a tradable event. As you can see right here, the MVT starts signaling red when Bitcoin's about 11,500. That would have been a god-awful trade to just hit the red button right there. But, I mean, we rallied $5,000 in the next 2 days. That's insane. Just as an aside. But you'll notice the first gatekeeper, as I call it, is this moving average on the MVT. It's this orange moving average right here. Once that gets...
What is that? What's the parameter on that?
The parameter is just default, just a 13.
Well, no, it's the default. But what's the? So it's a 13-day.
Yeah, 13-day moving average. Just
okay.
Simple.
Okay.
Yeah. So this needs to be hit before anything else that I talk about even matters. So once we actually confirm below this area, that's where an actionable trade can be had from the past. And you'll notice that happens right around here at around $19,220. Then all the next stuff that I'm about to talk about needs to be hit as well. So I'm going to go over here to the regular Stokes. Stokes crossing down, tick 1, and then getting out of the critical zone, tick 2. Those both things need to happen. That happens at around 18,500. Then we have the RSI. We actually do have bearish divergence here, although that is not needed. But getting below the exponential that I have on the RSI is needed. And getting kicked out of the bullish control zone is extra confirmation on top of that. That happens firstly at 18,500, then secondly right over here at around 16,500. Then finally is my own personal indicator. Is what I use is what I call the jewel. And this light blue oscillator that I have in here, when this gets into the more critical zone, that also is the completing signal. So all of those things in confluence with each other, mediated by the MVT signal crossing below this moving average right here, is what I typically look at. But we have a very special situation with what we're doing with what we're looking at right here, right now, in the more immediate time frames, as Bitcoin is brushing against some major, massive moving averages on all the higher time frames, as we spoke about before. I won't go over them again, but the daily, 2-day, 3-day, weekly, and monthly are all showing their major, trend identification areas coming in right around this 5,300-ish level. This is a blue 377 exponential, by the way, which was very important for traditional markets, kind of judge, the overall trend, as well as the monthly 21. Those would probably be the two most important ones right over here. And not only that, we are getting a bearish cross on top of that. So going back down into the charts, and we go over and we kind of backtest this, the MVT signal is red, so tick 1, but is the gatekeeper hit? No. We had a little bit of a fake out yesterday. In fact, we were not able to confirm below the moving average on this oscillator. The we need to both open and close one of these ticks below before that starts to be a topic of conversation, because all the other things are actually in place. The daily strokes are down, they're back below the critical zone. The daily RSI is it's actually giving us bearish divergence and back below the exponential. The daily jewel got into the critical zone and rejected. These are all the other keys, all the other pieces of the puzzle are in place, but the most important one. So again, we can backtest this for all the other major drops. Works for the drop at 10,000, or sorry, 8,400 right over here when we were red. Works for this one right over here at 74. Works for the drop of 6,000. Of course, if you go back into 2014, 2015, you can backtest it there. I won't go through it right now just because it's probably redundant, but overall,
no, that's excellent. And I know we've got a bunch of followers who really appreciate that. It's very, I love marrying things together, like Willie Woo's work and Tone's work and some of the Consensio work, and what you've done on not only the moving averages, but put together a basket of things that give you the signals. And I just love that NVT crossover with a 13-period moving average. We want to definitely talk to Willie Woo about that, which we will this Saturday. That's going to be one heck of a fun show.
Yeah, I mean, I have no opinion on the price at the moment. It's obviously the MVT is showing that it's overbought. Just like you, Eric, I tried taking on my short trade on Bitcoin with the intention of keeping that trade on for weeks to months, because my main expertise is as a swing trader. That's what I traded historically, though I have been a day trader. As a day trader, the 10-minute candle frame was my bread and butter. And I took on that swing trade using the 10-minute candles. And after a day or two, that trade didn't work out either. I got out of it with a profit of a few $100 on the price drop of Bitcoin. And I have not taken out a trade since. It's in my no trade zone between 53.50 and 49.50. I mean, the longer we stay in this trade zone, the more I can kind of squeeze it a little bit. But for now, if I see Bitcoin break out about 53.50, it's probably going to undertest the triangle at 6K plus. If it breaks under 4,900, we're going to at least 4,000. And I still think lower prices are on the way. I don't think we bottomed at 3K. Breaking 6,000 will start to change my mind.
Tyler, last summation, like Tone just did. I like that. And then I'm going to ask you, Eric, and I think we can close it.
No, that's all terrific. I am not impressed with what I've seen from the bounce off 3,000. Tone was correct on the fourth shot through the 4,200 level. I was correct the first three shots, and then I was wrong and he was right. And now the question is, what's next? And I've got to say that Eric has got me very excited about doing some work on that NVT, because with the other things that he just pointed out, I'm feeling pretty good about my call that we're about to go back down to the 4,200 to 4,000 level and probably keep on going. So that's my view of the world. And Eric, thank you very much.
Oh, Eric had some questions on Hyperwave. I'd like to hear them too.
Definitely.
Yeah, I'd love to hear how that came about. Where did you learn this from, or is it ancient knowledge, or where is this being taken from?
No, I learned it back in 1979 by accident, and I've kept it to myself until last year when Leah and I decided to make it public. And I've used it for trading 5 big hyperwaves over the last 40 years. The first was gold and silver back in the 1970s. The second was the crash in the 1987 stock market. The third was the end of the uprun in the Japanese stock market in December of 1989, and calling for a drop all the way from 38,000 down to 6,000. The fourth was the dot-com bubble, which I was able to call right at the precise top in March of 2000. And then the last one is Bitcoin. And I've been retired for the last 10 years, but my son and Leah's brother founded a business about 10 years ago, and they're basically IT specialists. They got into a lot of blockchain stuff, and one day my son called me up. Both of them had joined me during the summers when they were in college and knew all about Hyperwave and Consensio and some of my theories. And my son called me up spring of last year and said, "Dad, I think you need to look at Bitcoin again. I think it's starting a hyperwave." And so I spent a couple of months building my own pricing model because I didn't trust any of the exchange pricing, and came to the conclusion he was right. And then Lee and I put together this Hyperwave channel to try to show people that hyperwaves are great, but they all have two things in common. One is the first four phases of a hyperwave goes up anywhere from 8x to 40x, and the next three legs are brutal because you go all the way back down to the beginning of the hyperwave in three big waves. And we've got now close to 400 and some odd that we have cataloged over the last 100 years, and they all do exactly the same thing. So we're coming out with a book later this year. We're working with one of our close associates, a guy who goes by the name of Socrates, and we're just about finished with that. So we just decided we're going to make it all public, and that's why we set up this channel.
So I have one more really just question that I have to ask. With myself and my own trading strategies, I always have an area where I understand, if price action goes to this area, my original idea is wrong. For Bitcoin right now, while I'm not necessarily sold on it bottoming, it would have to get above, a certain price point for me to kind of switch around that mentality. I think we spoke about it earlier. Is there a price point for that on Hyperwave? What would change your mind to the opposite direction?
Absolutely. Great question. And I said before we broke down through 6,000 that if we were able to hold 6,000 and get above 8,500 and get a high above a high, that I would become fully bullish. I wouldn't put X into the market. I would put 25% X in above 8,500, another 25% above 10,100, another 25% above 11,100, and then the last 25% I would put in when we took out the highs at 13,000. So net, I'd be in at around 10 to 10.5 from that 6,000 bottom, but it didn't happen. And now, since 6,000 gave way, that was phase 2 of the hyperwave. If it had held there, then that would begin a new move that could be tremendous, up to 100,000 or so. It didn't hold there. It didn't hold on the phase 3 hyperwave line, which was coming in about 7,300 earlier in the year. It tried 11 times to break through it. Finally, it did, and that negates that as support. When 6,000 was broken, there is no more support in hyperwave theory all the way down to 1,000. I didn't pick 1,000 out. Back in December of 2017, I said Bitcoin's going to 1,000. But I said that because every other hyperwave has returned to that phase 1 line, unless it can hold the phase 2 or the phase 3. And in this case with Bitcoin, it did not do it. Therefore, I can't say anything else. People are mad at me because I'm very confident of the target. But I'm confident of the target simply because when you see something happen 400 times in a row, it's not a good bet to bet against the 401st time. Right. Now, is it possible that this will be, because Bitcoin is so unusual, that it won't make it to 1,000? It'll stop at 3,000 or 2,500, but Lee and I are confident enough in the theory that we've got a bet on the table that we're going to see 1,500 before we see 6,500. I wouldn't take it down to 1,000 because Tones had 1,300 as a potential target, long before we broke. In fact, on the way up, he had 1,300. So I picked that $1,500 number, hoping Tone's going to be right. Leah and I can make some money. And then if Bitcoin does not get to 1,000, that'll be the first time. And I'll say, nothing is perfect in technical analysis. It's just that this particular system has got such a silly track record over such a long period of time that there's no way I'm not going to tell people what I really believe.
Fair enough. Yeah, it's a game of statistics. I mean, that's what I always say. Technical analysis, it ain't perfect, but we're just looking for an edge and then play those statistics over time. And it sounds like you got a 100% statistic. I mean, that's pretty incredible. I mean, I'd love to see that myself.
Great.
Ty.
And we will go into a lot of that in the book. We also teach all kinds of workshops, and we've got webinars, and a lot of our blogs are about all the theory, but all the examples and all that sort of stuff. So, but we're going to be talking a lot more, I'm sure, because this has been very interesting for me. Thank you very much, Tone and Leah, for setting this all up. Fascinating stuff.
Yeah, Eric, thank you so much for joining us. Tone jumping in last minute, but Eric, that was really fascinating. Thanks so much.
Yeah, thank you so much for having me on. It was a pleasure meeting you, Tyler. Pleasure meeting you, Tone, and pleasure meeting you, Leah.
Great. Very good. Thanks, guys.
Thank you, guys.
Bye-bye.